Welcome to episode 150 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we are going to look at a range-bound market. A range-bound market is when the price fluctuates between two levels. So we have a resistance level at the top and a support level at the bottom. Price goes to the resistance level and then bounces off of that level to go back in towards the bottom of the range. And when it gets to the bottom of the range, we're looking for price to move up higher. So let's go on to the charts and we'll take a look at what a range-bound market looks like, where to enter the trade, where to place your stop loss, and how to exit the trade with a profit.
Today we'll take a look at how to trade a range-bound market. This is pound Swiss franc 30-minute chart. A range-bound market is when the price is going sideways. So usually there is a resistance level at the top that the price has trouble breaking, and then we have a support level at the bottom that the price is not able to go beyond to the downside. As we see here, price dropped, then pulled back into this level here before dropping further. And once this price starts to pull back, we see that it comes to the same resistance level once again and then drops from there and fails to break this previous low again. So once we see this type of a behavior, that gives us an indication that a range may be established. So we still have to wait for price to react at one of these levels, either at the high or the low. Here, as we follow along here, we see that the price comes and gives us a reversal signal. We see a railroad track signal here at our support level. So this tells us that price is likely not ready to move lower, and chances are we are going to the next support and resistance level, which is right up here. Once we see this reversal signal, a bullish reversal signal, we can enter the trade long here. Stop will go below the previous level here, making sure we have enough room for the trade to breathe. So we enter the trade long and we go with the trade till we get to the previous support and resistance level. As we can see, price has reacted twice at this level, so chances are quite high that price is likely to react at that level once again. So we want to place our take profit target just before price gets into the support and resistance level, and we can exit the trade. So in this case, we have 46 pips in the trade from entry to exit. Now, as we wait to see how price reacts to this level, we see that we get another railroad reversal signal, which means the price pulls back off of that level once again. Once we get this reversal signal, in this case it's bearish because price is rejecting this level, we can enter the trade short here, and in this case we would put our stop behind the previous level here, making sure there is room for the trade to breathe in case price goes and tests that level. We enter the trade short here and we stay with the trade, and our take profit target will be just before we get to this level. We want to make sure we put it prior to this level in case price decides to react above this level. Price turns around before that. So we exit the trade as price gets closer to this level. So our second trade is done. Now we're looking for price to react at this level. So here we have another reaction. We could take this trade, but here is a better signal. We see a bullish pin bar again at the support level here. So once we see this, we can enter the trade long, and we have our stop behind the level, right about the same place or a little bit below the pin here. Then we stay with the trade and we wait for trade to get to the next level. So in this case, our first take profit target will be closer to this level here, but as we can see, price does not reach that resistance level and instead turns around prior to that. Once we get this big bearish candle, we want to exit our trade because at this point price could continue lower, which it does here. So we exit the trade. In this case, from entry to exit, we get 43 pips in the trade. So this is how we would normally trade a range-bound market. So basically in a range-bound market, price will stay between a resistance level to the upside and support level to the bottom of the range here, and price will just shuttle back and forth between these levels till a trigger comes into the market and price breaks to one side or the other. As we can see, eventually price will break. In this case, it breaks down to continue the previous trend. But while the price is range bound, we can still take trades in this market. And this is how we do that. Every time price comes into the resistance level, we are looking for a reversal signal and looking to sell. Every time price comes into the support level, we are looking for a bullish reversal signal, and we are looking to buy. And our take profit target will be closer to the resistance level when we are buying, and it will be closer to the support level when we are selling. So we can do back and forth trades. We can usually get multiple trades like this as long as the price continues within the range. Once the price breaks to either side of the range, then we can look at a continuation trade setup. So this is how we trade a range bound market, and in this example, our profit in total is between the three trades here is 143 pips or $1,430 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. I hope you enjoyed this episode. If you like this trade setup, please feel free to share it with your friends. Also, don't forget to like, comment, and subscribe to the channel. I'll be back again with another great trade setup next time.